What's going on, everybody? This is Anthony here from MarketChartWatch. Today we've got a special video for you. We're going to be taking a look at the fundamental analysis of an actual company. We're going to use Tesla as an example tonight, and we're going to look at their statement, their earnings, their revenue, and then we're going to show you what the stock price did after all of that information was announced for its quarterly results. And by the end of this video, what I'm hoping to teach you is how much more important technical analysis is on a short-term multi-year horizon as compared to fundamental analysis. Now, I want to just say off the bat here, fundamental analysis is very, very important to understanding everything that I'm going to show you today for a time horizon that is multi-year into decades. But on the short term, when we're talking a year and below, or even a few years for that matter, technical analysis is going to be so much more important. And this chart, looking at Tesla, will explain this exactly to the T. So you need to watch this video to the end to understand this. So number one, what I want to bring up is just a timeline here of the Tesla chart. And I've left out aftermarket trading. So I want you to just go through this video and see what we talk about, and I'm going to paint a fundamental picture of what's going on with this company, and I want you to think which way the stock price should move. And then we're going to look at the technical analysis and see which way should the stock price move, and we're going to see if they differ. Okay? Now, Tesla had earnings today, and those earnings came right after market close of today. So I left aftermarket trading out of this. We're going to look at it in a few minutes, but let's go ahead and look at Tesla's financials here and see what sort of happened in this quarter. Now, there's going to be a lot of data here that you may not need to know, but one of the things I want to point off right off the bat, the price to earnings ratio, the PE is 111.61, so that is massive. We want to own companies with a PE ratio between 15 and 20 for long-term capitalization. So just based off of this, you're paying a lot of money to own this company, okay? So some other things that I do want to look at here is the performance of our growth and profitability. And what we can see is we haven't seen too much of a movement in revenue changes over the last year and a little bit of uptick in net income. So this company was selling about the same amount of cars and making the same revenue, but they were able to get their product cost down, it looks like. So they were able to make a bit more money, okay? But that was the previous year. So some other things that I want to look at is the revenue. So that is in line with this growth and profitability. And we can see over the last year, we've been pretty much net neutral. Our revenue has been down a little bit, quite down in quarter one 2025. So it looks like the money we're bringing in 2025 is down by 9% as opposed to the last quarter. Okay. And so it's actually been down 3 quarters in a row. So this company is not bringing in as much money in its revenue over the past 3 quarters of a year. And now when we look at earnings, so revenue is what the total amount of money that the company brings in. And then think of our earnings as what we actually get to keep, right? After we pay for all of our bills, we pay taxes, we pay our employees, etc. And so with this company, you can see a couple of bad quarters. So quarter 2 last year, 15%. They were up 21% the next quarter. But I want you to look at this Q1 25. This is huge. There was a surprise in an earnings stall of around 34% as to what was expected. Okay, so this is huge. So let's actually go take a look at this. First off, I just want to show you this quick chart here. I want to show you our price to earnings ratio, how high that is, showing that this company itself is very overvalued based on the PE ratio. And then the price to cash flow is also very high, okay? And I also want to note that the price to book is also incredibly high as well. So let's take a look at the earnings and the revenue, since that is what's really important with the company. what are they taking in and how much are they actually keeping. Okay, so if we take a look at what the revenue stream is, you can see in the past few years, Tesla has improved upon its revenue. Okay, and it's improved upon where that revenue is coming from. But you can see some of the tariff stuff might take place here because we have a substantial amount of revenue from China. Okay, now let's take a look at the earnings. And you can see down here, we can see our reported earnings for Q4, Q3 of 2024, and then 2025. And look at the huge difference here. Look at the amount of earnings growth we've seen here, and look how much less it is in Q1 of 2025. And this is where we're getting that 34% unexpected move to the downside. Okay, so this is a surprise that Tesla is bringing in less money than they were in the last few quarters, to the tune of 34%. That's huge. Okay, now when we look at the revenue stream, in Q3 and Q4 of last year, they reported some $25 billion in net revenue. If we look at this year, first quarter, they've brought in about 20% less than that, give or take, here. Okay, and so that's where we see that surprise of around 10% here. So given the fact that Q3 and Q4, that's about 5-6, so that's about that 15 to 20% that we're seeing drop here. So their revenue has dropped substantially, which means the money they've brought in has dropped. Okay, their earnings have dropped, which means that not only have their sales dropped, but it's costing more for them to sell whatever they do sell. And then obviously their price to own their shares is incredibly expensive. So number one, this stock is expensive to own based on the price to earnings ratio, the price to sales, price to book, etc. We're going to talk about all those in other videos. It's also making less money year over year in revenue to the tune of 34%. Okay? Or sorry, earnings to the tune of 34%. And it's also bringing in approximately 10 to 15% less revenue this year. So all of these things tell you that this stock is so overvalued in a fundamental platform of where it's trading. This stock is very expensive for what it is on the fundamental charts. And today they released that Q1 2025 data showing, hey, we are bleeding money here. And what would you expect the stock price to do if you got news that was that terrible? Well, most people would be correct in saying that when they hear news like that, the stock price would decline, and it would decline severely. But I want to stop you right there, because fundamental analysis only paints the long-term picture. I'm going to repeat that. Fundamental analysis only paints the long-term picture. Now, technical analysis paints the short-term horizon picture. And so let's take a look at what the technical chart says before we venture on to see what happened today. Well, if we take a look at Tesla here over the last, give or take, year and a half, you can see we have quite a bit of support here at this line, and we can draw a horizontal line here, and we have quite a bit of support here, and we'll draw another line, give or take there. We've got a couple of touches, and you can see we created this massive fair value gap here about a year ago where we gapped up like 15%. We rose way above it, broke into a trend channel, and now we've been testing that fair value gap. So let's bring us way back into here, and shall we actually take a look and see what happened after hours, after that earnings report where Tesla was bleeding money left and right. And we would assume that if fundamental analysis took over, that this stock would tank, and we would assume that if technical analysis took over, we would be somewhere within this channel. Well, what happened? Place your bets. Well, this may not look like a lot to you, but let's map this out. At market close, stock price was at 238 and change. And since that bleeding news took place, that stock price made a move to the upside of 7.67%. This goes against everything ingrained in the concept of fundamental analysis. In no way, shape, or form should a stock price ever improve to the tune of 7.67% when it is losing 15 to 30% of its revenue and earnings over a quarterly basis. That does not make fundamental sense. Okay? So that's the picture I want to paint here. Now, what does make sense is the technical analysis. We can see here that we have some support from a multi-day low. We've bounced off it once, twice, 3 times, 4 times, with some support down here on the multi-year level and a massive fair value gap. So if technical analysis were right, we should live somewhere within this gap. And technical analysis tells us that most things will try to reach support or resistance in either direction. So if we bounced off here, we will typically not find any resistance until we hit another form, which is this, in our case, a fair value gap, or this multi-year point of support and resistance. So somewhere in here, and you can see we found it once, twice, 3, 4, 5, 6 times, and now 7 times. And so technical analysis would tell us that this move was predictable. Okay? So this move was predictable. Now, was it predictable to the upside? Well, absolutely not. Most would predict that this move would have gone to the downside and then maybe worked its way back up to this fair value gap. But in any rate, this stock, from a fundamental standpoint, should have never improved in price. It should have declined in price. But the point I'm making here is that fundamental analysis does not run the market. Technical analysis does. Technical analysis is where companies set their stop loss orders. Technical analysis is where companies put their call option orders, their limit sell orders. This is where they sell their covered calls or they sell their cash secured puts. It's all based off technical analysis and not off fundamentals. And that is why technical analysis is what runs the market on a short-term, multi-year time horizon. Now, if we are talking long-term, like multi-decade, and this is a gross over example of this. That's actually a terrible example. Let's go to like a monthly chart. Then yes, we can say that fundamental analysis over a period, say, you know, this is like 2018 and we're in 2025. Fundamental analysis would tell us that yes, this would likely come back down to some considerable level, or the price would stay here until inflation brought it back to the quote-unquote median. But on a shorter term, you know, multi-year or less time horizon, there is absolutely no substitute for technical analysis. And so that's what I wanted to bring up for you guys today, is looking at technical analysis. And if you're not already subscribed, I'm going to ask that you guys do go to YouTube and you take a look at my channel here, MarketChartWatch, where I post a video every day that I'm not working, talking about what the market's doing or talking about some education based on like a certain fund. So if you want to look at like a
Hey
Schwab
guys,
fund, or if you want to figure out how to trade options, I've got videos for that as well.
I'm going to give you.
I also have an Instagram page where I can show you basically all that same stuff. So we can take a look at my Instagram page. You're going to have the same videos here. And so I hope you guys enjoy the content, and I hope you learned a little something tonight. Anyways, the markets are going to be interesting coming into tomorrow. We had a pretty big implied move out of the fair value gap. And so what that means for me is we're likely going to see some move up to here and probably or a retracement back here. So we're going to have an implied move in either direction of around 1.5 would be my guess, 1.5%. And we could pull that up on bar chart and look up the implied move. I've done that in like 6 different videos before, but I'll leave that out for tonight. Anyways, guys, thanks for watching. Like, share, and subscribe. It's been another video from Anthony here at MarketChartWatch, and we will see you next time.